So I'm gonna say it right now because I've been looking around on YouTube and everywhere. I am the only person in the Forex market that trades consolidation zones the way that I trade them. You can open up a naked chart like with nothing on it because I don't use indicators, nothing like that. It makes everything on the chart clear. Hitting these consolidation zones will really tell you where price is gonna go. All right, we're gonna pull up TradeLocker. This is a perfect example of key levels.
Our first two sessions, people were like really surprised how you trade, and you're, I wouldn't say even surprised, but it seemed the way you marked up the charts and the way you analyze it, it was really kind of like you can make something happen out of anything. And it's not if I'm correct, right? How would you explain your strategy just for the people that are joining in right now and don't understand why you've been here for this 7 times?
Yeah. Strategy, yeah, it'll be good for anyone new here. So I'm gonna say it right now because I've been looking around on YouTube and everywhere. I am the only person in the Forex market that trades consolidation zones the way that I trade them. I have not seen anyone else trade consolidation zones the way I trade them. You can open up a naked chart like with nothing on it because I don't use indicators, nothing like that. I can open up the chart, I can make a clear picture of it. And when I started showing people like, hey, take off all your indicators, I'm about to show you like how to make everything clear and you'll see where price action is going. That's just what the strategy does. And it makes everything on the chart clear. Visually, it's a lot easier to see things going on. You know, people with the indicators or lines, I'm not knocking it because it might work for them. But yeah, no, with the strategy and the way I developed it, I wanted it to be more simple on the charts. I wanted trading to be simple. I wanted it to be visually easier because everything I was learning before was just visually, it was difficult to put everything together. And nothing just really made sense between the indicators and other strategies. Like, yeah, I take bits and pieces, maybe from SMC, ICT, but I don't focus on it. I use it more. I use SMC and ICT more of like a confluence, like confirmation of what's going to happen. But my strategy, yeah, like hitting these consolidation zones, I'm more of a breakout trader. I consider myself a breakout trader. So hitting these consolidation zones will really tell you where price is going to go. So yeah, I just like to make it clear and simple.
Well, I'm going to leave you the floor and give us a little bit of an update what you wanted to talk about today.
All right, we're going to pull up TradeLocker. All right, so you guys can see my screen?
I can see it, and I can see that it's TradeLocker live.
Yes, sir. Always live. So let's see. Let me get rid of this order panel. I still use the hotkeys.
Really?
All right. Yeah, I use the hotkeys all the time. It's way easier than just like dragging them or doing whatever, you know, like trying to get the panels to drop by themselves or just drag them. Like for any of y'all who don't know, any of the new people, hotkeys, if you press, it'll bring up the order panel. You press M, it'll bring up your instrument panel. And then if you press T, it'll bring down here up. You can open and close it with the letter T. I like using them. It's a lot faster. So
there's 30 people here, including me and you. I'm going to give you a little bit of a teaser. If you press, not now, but in a couple of days time, if you press Command or Control plus K on the floating order panel, it will open up a quick instrument. So you won't need to open the instrument panel to go to another one. So that's another hotkey that's going to happen.
That's dope, actually. I like that.
I'm glad you like it.
All right. So now for today, I wanted to talk about key levels because I went through the other auditorium sessions. I don't think anyone's talked about it before. And I get asked about it a lot. Key levels are important in trading because, especially right now with gold is between like a range. It's caught in between like a $40 range between $23.40 and then down to $23.20. And that's kind of what we're facing right now. So key levels, like when you first open up a chart, because I only work from the 4-hour down, I'll look on the daily as well, monthly, weekly, daily, weekly, monthly, if it hits a key level. But for today, I'll focus on what I'm seeing here with gold and what we've been focusing on for the past 2 weeks. So key levels, when you open a chart, you guys don't have to overthink it. Just look at the chart and key levels will be basically like even, right? You'll have even price like up here. See all these highs that come across? This is a key level. Yeah, price broke above it once before, but now we traded back into it. And look at after it came back down, it touched again the same level. And look where we are. It dropped down, came back up, keeps touching that level, right? So when you see price do something like that, that is a key area that you need to focus on, because the break of here, just like what happened here, the break of here will provide a continuation to the buy side. Like here, we got the break, we got a retest, continuation. And that's what we look for. Same thing, sell side. We broke, retest, continuation down. The way I like to mark it up, you can do it with a line, but I like to use a rectangle tool. I'm not much of a support and resistance trader, but I will pay attention to it. So this is what I will draw up. And I always use text boxes just to mark up everything so I don't get confused with what I'm doing. And for resistance areas, that's the line. I will turn these to red. That's where price, I'll change that to red, and I'm gonna get rid of that. So all these equal highs here create a resistance. I'm sure any new trader, I'm sure you guys have heard about that before. So that's what we're focused on for gold. We have that resistance. Now, what do we see down here? Why did I say 2320? Because if you look across all these wicks, it's 2320, right? Down roughly 2320. Here, 2320, and it continues across. So at the moment, this is what we're watching for the sell side, right about, Try to mark it up the best you can, but this is how I like to do it. And I turned this, which is going to be more of a support, right? So visually, with these two boxes, you have your support and resistance drawn up on the 4 hour. A lot of the time, well, not a lot of the time, but once we break out of this area, you're not always going to have a support and resistance, right? Like here, price just continues going up, so you can't always rely on support and resistance. But for this instance, this is a perfect example of key levels for the past couple weeks, which is why I wanted to go over this. We have these key levels. We have anywhere up here like 2335 to 2340-ish, and then down to 2320. And that's what we've been focused on. Now, for anyone who's new here, I'm just going to run through it. This is how I would mark it up. This is how I mark my charts up every day. And this is just my strategy that I developed. And it took me a while to develop it because I got sick of indicators lying to me, like RSI. I think RSI is a bunch of BS. It could say it's overbought and continue buying when people want to sell, or whoever's using the indicator wants to sell. So I don't use indicators. So I mark up the 4 hour high, 4 hour low, candle bodies. I don't focus on wicks. There's volume in the wicks and there's money placed in these wicks. But if you focus on these wicks, you can end up in a bad trade like today. Say you wanted to sell 2320 at the wick. It came down, it would have triggered you in, and look where price is, 90 pips back up. So every day, this is what I do. And key level that we're focusing on is up here, the 2335, 2340 levels, and then the 2320. Once you identify those key levels, that's what you're going to be focused on. What I've been focused on with my group, like I'm going to use this as an example back here, is once these levels break, like I explained earlier, you see how you have the break, you get the retest, and then continuation. That's the reactions you get at these key levels. It will tell you the direction that price is going to go. Now, you can have key levels in anything like Bitcoin. Bitcoin, actually over the weekend, I mentioned key levels. Same thing here with Bitcoin. And it just works out the same. Where you see price flatten, and as you can see, even on the 1 hour, I dropped down to the 1 hour. It correlates with that 4 hour, right? With the 4 hour time frame. It's just correlating all the way across. And the further you go down, it's just going to keep correlating. 30-minute, same thing. You see all these touches. You see all these touches above. It just correlated, or it's just correlation. And so the 15, there was something else that happened on the 15 today, I believe. Where was it? Right here. Now, aside from that 4 hour key levels that we're watching, 2320 upwards to 2340, what happened on the 15-minute today? Let's see, what time was it at? It was London session. I was up for London session. I was watching this right here. This, you can look at equal lows as well, and that could be a key level. To say this equal low breaks, potentially, it's not a given, but potentially, once this level breaks here, this could be another key level. You got price dropped here, price dropped, and it just equally flattened out and then pushed back up. You could look for stuff like that too. These are equal lows. I still consider them as kind of key levels, because say you get price drops and breaks, like what occurred here. Let's see, like what occurred right here this morning. Whoops. Let's see. There we go. Like what occurred here this morning. I didn't take this during London session, because guess what? My strategy, I would put my sell stop here. After you get this pullback, my sell stop never got triggered and price came back to the top. So I canceled out my sell stop, but that's not what we're focused on, right? we're focused on this area here. On the 5-minute is where I take my entries. Now, price broke, came back up, never triggered my sell stop. So then I just waited. Eventually, look what happened. You got a break of that level again. And then where I would have taken the trade would have more than likely been right here. And I believe it was a quick move. It provided about 40 pips. So, I mean, that's not a bad move, but I wouldn't take that move because why? The key level, 2320. These key levels, they trump, in my opinion, they overtake like equal lows and equal highs, stuff like this. Like, yeah, I could have caught 40 pips, cool, you know, but I'm focused on this 2320. If we would have broke down further down and then retested back up maybe this 4-hour range here, yeah, we would more than likely had a continuation down, because 2320 as of right now, as you guys can see, is very strong. Like 1, 2, 3, 4, 5, this morning 6. So it's very, very strong. So why I didn't take that sell? Because I'm really wanting this 2320 to break. That's what I'm looking for. And as you see, this key level, price reacted off of it. Price reacted off of it from this morning. And that's like the importance of key levels. You have to pay attention to them because they can save you from a bad trade. And they can save you just from being in so much drawdown. Like right now, gold's pumping. It hit 2320 again, but it didn't break, right? We didn't get no break. We didn't get a close below 2320. It just dipped and shot back up. And the easiest way to identify key levels, like I said in the beginning, you see price touching the same area, the same price point more than once. And if it helps, you can throw a line up there. You can throw a line up there and then you see price hit that area. And what I like to do, I like to draw my box and then I like to put the line at, say, the 50% of that box. Because that 50% of that box is the Forex market, for whatever reason, is like 50%, like ICT. Fair value gaps, which I don't trust fair value gaps. Fair value gaps, they usually hit like 50% of the gap of like the imbalance up here maybe. Price may come back down. Or price could just blow straight through and just come up back up to 2400, clear highs, whatever the case may be. But yeah, the Forex market, for whatever reason, I've noticed they like 50%. So I usually put the line at like the 50% of the resistance or support box. And then as you see, price is just bouncing off of it. It could wick, it's wicking, could break above, but keeps closing below it. And that is how, like, your key levels, just equal highs, equal lows. Price keeps touching in the same area more than twice, even more than 3 times. If price continues to touch in that area, then you know you have a key level. And you know if it breaks, then it's going to cause a reaction in the market, whether the price dumps, pumps, whatever the case may be. But for right now, we're still stuck. We've been stuck here for weeks and weeks, right? We had this initial push, we had this sell-off, but we're still here. The market rebalanced and it is stuck in this area here. And that's all it is. I think people overcomplicate key levels for whatever reason. Trading isn't meant to be difficult. A lot of people that you see on YouTube and a lot of these like Forex mentors, whatever, they make everything difficult. I don't know whether it's because they want to make themselves sound smart, but no, you just got to keep it simple. Like, because the more difficult you make trading, the easier it is. The easier it's going to be to lose money, you know?
Yeah.
You just got to keep it simple. So, yeah. But with the strategy, we've been hitting these consolidation zones. We can still pick out consolidation. The month of June, the market conditions just weren't great. We had a few days that were really good, but June just wasn't a good month overall, trading-wise. Hopefully July will be a lot better. But yeah, key levels. You just want to identify those key levels because that will allow you to be like, all right, if it hits here, we can expect buys to a certain point, or it might reverse here. Or if it hits back down to the support level, we can expect it to sell off if it breaks through. So the key levels while trading, yeah, there's a lot going on in your head. You have to track, but you still have to keep in the back of your head. If it breaks above, say like 2338 is kind of really where 2338, 2340. I'd say 2340 would go at this point. Once it hits above here, which it looks like it may today, we could see something like this, like where it just comes up and then we'll get our retest. If price wants to continue, price would come back down and just continue retesting. And then we get the continuation where price just wants to go back up. And anything like that, if that happens today, where's my buy stop going to be? Because I don't trade the retest. If it's a true breakout, my buy stop will go up wherever that pullback initially occurs. My buy stop will go there, because if price wants to come back down, my buy stop will never get hit. And guess what? I'm not in the market off of a retest with price selling off, or I'm not in the market on a market order just because price broke the resistance that we're facing right now. So key levels, and we always get that reaction at key levels: the break, the retest, and the continuation. Or it'll break and it won't retest, it'll dump back down, and maybe dump back down into here, but you just never know. Yeah, the key levels are important. It's just that simple. You just have to identify where price has hit multiple times, and it's not always going to happen. You're just going to have days where price is just like here, just going to straight go up. You're not going to have, or let me go to the 4 hour, because right now we're kind of focused on the 4 hour levels.
Identifying them, identifying them will make your life so much easier when you put it like that, when you put it simply like that.
Yeah, like I said, over here we even kind of had it right here, 23.30ish for this time being, but you're not always gonna have it. So that's one thing support and resistance traders do when you do this. There's no support or resistance, it's just price action. Like gold's just going up or gold's just dropping. So at that point, you're going to have to know what price is, understand price action, right? Even here on the 4 hour, you can see here kind of where price is just tapping into. And it's easy to see. It's just where price taps into multiple times. It's just easy to see. Like down here, same thing. Price tapped from here across multiple times. And that's just the key levels. That's all it is, you know? It's nothing complicated. I don't want anyone to make it complicated. Say like up here, you have multiple touches again. You know, it doesn't occur all the time, like I said, but it does occur. And you can watch for that, and you can trade based off of that. But you still have to be careful, because once that level breaks, then your bias can switch. Down here, your bias can switch. Once this high is broke, your bias can switch around here. You don't even have to wait for this level. But once you notice this level, like, yeah, you can get a trade in, and you just never know. Me, I like to close out before at the end of the day. I'm not a swing trader, so I'd be trading in between here. But yeah, once that key level breaks, I mean, as you can see, same reactions, same thing here. This isn't really a key level, this is just a high that was broken. But yeah, it's the same reactions all the way across, and it's just where price touches multiple times. And you can open up the 4 hour chart or the daily, and you can just see it. You can see if price flattens out somewhere visually, like how we did over here, and you'll be able to identify that as a key level. That's what people mean by key levels. It's just where price touches multiple times, and you're just waiting for a break. So that's basically all it is.
I see people relating in the comments. Bobby says using key levels helped his trading significantly. And Shockwave says RSI is only good for spotting hidden divergences, I would say.
Yeah, divergences. Yeah, there's divergences you can go a lot into. People do use indicators for divergences. The way I would use the treasury yields. The treasury yields, they diverge with the dollar. You can tell which way the dollar is going to go based off the treasury yields, because the 10 or 20 will be like going one way, and the 30-year might be going the opposite way, and then the DXY it'll follow the 10 and 20-year, or vice versa, whatever the case may be. So yeah, divergences, I don't focus on divergences, but some people trade with them. But yeah, I just try to keep it simple and go with my strategy. I know I didn't really show the strategy in depth here, but yeah, today's more about the key levels. So yeah, that's what we're watching on gold. That is what we're watching. I'm hoping we can break above, depending on what Powell's saying. And we still have news at 9 Eastern, or actually 10 Eastern. So another 10 minutes, we have another red folder. So after that red folder, we'll see what happens. But
let's go.
We could see a break above here, a retest, continuation back up to this imbalance, or you never know, price may sell off and just do the opposite, come down 23.20, fill down here. But yeah, that's what we're watching for today. But I feel like it might fill the imbalance up here, but I don't know. You know, I don't like to go with a bias of buy or sells. I mean, you know that I trade based off of price action, and price action is going to tell me, like, we're buying today or we're selling. So I don't go in with a bias every morning.
Yeah. I'm gonna tell everybody, we didn't go in really deep into your strategy. This is just a part about key levels, but combine this knowledge that you have right now and go to the YouTube channel and check out Devan's past auditoriums where he explained his strategy more in depth. So yeah, I think we can, close it off. 10 minutes until the news. Something can happen, what you said before. And if you have any closing remarks, feel free to say, or if you guys have any important questions, feel free to ask now.
Yeah, any questions? I'm open to it. My strategy basically is based off of price action, breakouts, watching for fake outs, and waiting for my entries. Yeah, I'm a breakout trader. I consolidation zones. So like I said, no one trades consolidation zones like I do. So I think that's why it works, and it's simple, and it's just simple. But yeah, if y'all have any questions here, you can ask me now.
Here it is.
Or
there is one from Bobby. I don't know. Last time you were here on the auditorium, it was like a month and a half ago, something like that. Yeah. And in the meantime, Bobby became one of our top audience members, asking great questions. So he has one. What amount are you looking for? What amount are you looking to risk per trade?
Am I looking to risk? Well, me, I use a mental stop loss. I don't focus on, that's another thing. I don't focus on risk reward. When I tell people that, they look at me like I'm crazy. I don't focus on risk reward. I let my trades run. I have a mental stop loss, such as, say, if I'm going to buy here, like this morning, where was it? It was back here. Yeah, like this morning. I mean, you had this little buy that could have occurred here. Me, if I got in right here, I'm using no stop loss. I'm only going to hit what I would have traded up into here. I'm not risking much. Well, I am risking because I'm using mental stop loss, but depending on my position, I will either get nice breakouts. Like a lot of my stuff will happen like this. Like, look what happened here. We broke this high, right? This is bullish. We broke this high, this previous high, closed above it. We got a pullback, and then my buy stop went here. And look what, 80 pips up. I mean, I get a lot of trades like this. Do I really need a stop loss? Or do I need to worry about risk? Not so much, because I'm a breakout trader. Like, a lot of my trades will happen like this, and it'll just trigger me in, and it'll just skyrocket, or it'll drop, or it'll just bounce around, and then eventually it'll skyrocket and drop. Sometimes I do enter drawdown. My risk for the drawdown, I like to look for closes below, like say we made a lower low, I would probably close after that lower low, depending on what price action is doing. So that's how I manage my risk. I watch more price action, and say price, if I was in here and price dropped down, back down to here below these lows, yeah, I'd probably start thinking about, all right, how am I going to manage this trade at that point? But risking per trade, I don't know. Sometimes I go all in. Like when I first started with TradeLocker, I was throwing 2 lots on a $3,000 account, like what I have right now. 2 lots on a $3,000 account, I don't recommend, but I made 12 grand. Sometimes I'll reduce my risk. Like right now, my risk is reduced. Why? Gold is just ranging. We don't know where it's going to go. I don't want to get caught up in, I don't know, a trade where it could just trade back down into the bottom of the range. So yeah, I'll reduce my risk depending on market conditions, depending on what the market is doing, depending on news or what the day is looking like. So yeah, my risk is kind of like based off of how I feel for that day, or what price action is doing for that day, or what price is just doing in general. I assess my trade as the trade is going. But yeah, my mental stop loss, it hasn't steered me wrong yet, so I don't recommend it though.
So you don't recommend the way you trade?
No, as far as stop loss goes, even in my Discord group, I tell people, use a stop loss. Like, protect your capital, use a stop loss and protect that capital. Me, I'm already, my strategy, I can mark up my chart in 5 minutes, like I said earlier, and I can hit a trade, and who knows, my day might be done in 30 minutes. I might make enough for that 30 minutes where I'm good. But yeah, no, I don't recommend it. Always use a stop loss until you feel comfortable with a strategy to where, like, yeah, you can let the trade run free, because I let a lot of my trades run free, until you can have the confidence and where you're trading stone cold, where you're not nervous about your trade, like going into profit or loss. Yeah, I would use a stop loss.
Yeah, I agree. Well, Devan, again, thank you for dropping great knowledge, great tips. I wouldn't say these are tips, this is knowledge, and I believe that people got what they came for. Sorry everybody for the technical difficulties in the beginning. You all know that it was really weird. I couldn't hear Devan, he couldn't hear me, but somebody can hear me, somebody can't. Like sometimes there's problems with Discord. Of course, this is gonna be on our Instagram, our YouTube, Devan's Instagram, Devan's profiles. Go to his handle on Instagram is the same as here in Discord. You can follow his journey over there. And yeah, that's it. I'm gonna let you know, everybody, for the upcoming auditoriums. And until then, take care. And once again, thank you, Devan, for taking the time to be here with us.
Yeah, you're welcome. Anybody got any questions, hit me up here, Instagram, anywhere. You can find me. I'll help as much as I can. So
great. Actually,
it's great, Antonio.
It's Devan, Devan. It's not Devin.
Hey. You got that right. Hey.
It's Devan.
Nah, you good.
Don't worry about it.
I appreciate you guys. Appreciate you, man. I hope you guys enjoy the rest of your day. Enjoy the rest of your afternoon, Antonio, and I'll catch y'all later.
Of course, man. Have a good day and good luck with everything. Bye.